In the last 24 hours, XRP went up as much as 16% as Bitcoin went over $21,000 and the biggest cryptocurrencies showed signs of coming back after a big drop last week. Yesterday, at an event in New York, the team behind Solana announced the crypto-native Solana mobile phone. This made the SOL token go up by 8%. The price of Avalanche's AVAX went up 8%, adding to Thursday's gain, when the project added a native bridge to the Bitcoin network. Thursday's run was added to by Polygon's Matic, which went up by 17%. During the afternoon in Europe, Bitcoin broke through the $21,000 level. This is part of a steady rise since last weekend, when it fell to almost $18,000. Current levels have been a resistance zone for the biggest cryptocurrency by market capitalization, and if it goes back up above $21,000, it could go up to $22,600. In the past week, there has been selling pressure on Bitcoin because of systemic risks in the crypto market, such as crypto lenders pausing withdrawals and the collapse of the popular crypto fund Three Arrows Capital, which owes creditors hundreds of millions of dollars in Bitcoin and other cryptocurrencies. On Friday, things got better because the stock and bond markets as a whole went up. Asia's stock markets went up. The Hang Seng in Hong Kong went up 2.09%, and the Shanghai Composite and India's Sensex both went up 0.89% by the end of the day. At midday, the Stoxx Europe 600 went up 1.49%, while US futures went up at least 0.5%. The head of the U.S. Federal Reserve, Jerome Powell, said on Thursday that the agency was unconditionally committed to bringing down inflation, which is at a 40-year high. He also told Reuters that he thought economic growth would pick up in the second half of the year after a slow start. Powell's comments suggest that interest rates may go up soon, but Jeffrey Halley, a senior market analyst at foreign exchange broker Wane, told clients in a note that markets continue to price in a recession, stopping rate hikes in their tracks much sooner. Goldman Sachs and Morgan Stanley warned again this week that investors were not fully pricing in the risks of a recession. Citi said that there was a 50% chance of a recession. The moves this week could still turn out to be the result of a financial market genetically pre-programmed to buy dips in equity and bond prices, thanks to 2 decades of central bank largesse, Halley said. It could also be a bear market correction as the stampede for the exit door got overdone in the short term, leading to a short squeeze. Powell's comments came at a time when investors were still worried about inflation and stress in the supply chain. The Fed raised interest rates by 75 basis points last week, which was the most in 28 years and was done to stop inflation. In July, the rate is likely to go up by another 50 to 75 basis points. And meanwhile, crypto traders are still being careful about the current market turn. Alex FX Pro told CoinDesk earlier this week that it would be too soon to talk about a long-term change. All negative fundamentals remain. Until sharp monetary policy tightening becomes the norm, financial market pressures can quickly negate bounces in cryptocurrencies. That's it for today, guys. See you in next one.